while we were in the break, the Nifty has hit the coveted 24,000 mark for the first time ever. A new record high level coming, a new benchmark that the Nifty has set, actually, given the fact that we have actually seen this climb in very less trading sessions. And Ajay, 24,000 on the Nifty, rubbing your eyes given the fact what happened on June
I was
4th.
always expecting it to happen actually, because stability of the government.
Yeah.
I mean, I'm telling you, last 24 hours, the sign which we are seeing, current account turning surplus. Then you see RBI governor coming out saying that we are getting to a 8% sustainable growth. Right. It is no mean feat. We may not have as journalists because we have more in here and now, business journalists. But that commentary was a very important one. There are liquidity. Look at that, 5,000 crore came in yesterday from DIS. No stopping of SIP numbers. I mean, where is the worry? And that is actually the biggest worry.
Where is the worry?
A lot of people yesterday, last evening, we were talking over the phone in the evening and now feeling jittery because they are sitting on 60-70% gains. Portfolios have doubled in the last 2-3 years. They have not seen so much of wealth in a short period of time. So people are getting jittery, but yeah, time to be cognizant of the fact that it's a nice, we are in a nice mature bull run, ride the wave. Long-term investors, no issues. Short-term, players who are sitting on a very fat profits in short period of time, don't mind taking some chips off the table, but structurally there is no issue. In fact, Nilesh Shah is now joining us and so is Dinshaw Irani as well. Nilesh bhai, good afternoon. What a nice time to have you. Just 2 days back, we were talking about how robust the domestic environment is looking at, and we are above the 24,000 milestone on Nifty. Dinshaw, good afternoon to you too. Congratulations to both of you. Nilesh bhai, any worry signs, anything we should be kind of cognizant of, or things are looking fine and we should just ride this move? A lot of investors are asking all of these questions to us on social media too.
So undoubtedly, Ajay bhai, as you summarized, as of today, there doesn't seem to be any worry, and that should be our biggest worry. Undoubtedly, markets have run up based on fundamentals and flows, but valuation is something which we have to keep in mind. What we have seen in last 18 months, 24 months post-COVID, we are unlikely to see in terms of return in next 18, 24 months. We had cheap valuations in our favor and hence returns look so good. Now, at this valuation, one will have to moderate return expectation and one will have to be a long-term investor.
Right. Nilesh bhai, I want to talk about, see, macro indicators you yourself watch very closely are looking fine, but what about micros? Anything on earnings which should be, we should watch out for closely earnings, especially the FY25 earnings growth trajectory?
So as of today, we have clarity for next 2-3 quarters where loss-making companies have come down significantly in areas like oil marketing companies, telecom, PSU banks, and so on and so forth. This has pushed our earnings growth to almost, 1,000 rupee earning per share for FY24. Next year, people are looking at earning of anywhere between 1125 to 1150. That's still about 13-14% earnings growth. And for FY25, people are looking at about 1300 to 1325, which is about 15% growth. The profit to GDP ratio has moved from 1.6% of GDP few years back, about 6 years back, to now almost 5% of GDP. So things are looking good, but please be aware that markets are all-time high because profits are also at all-time high, not only in absolute number, but also as a percentage of GDP, bearing period of 2008. Valuations are fairly priced. There are pockets where it is very, very expensive. So please be a long-term investor. Please moderate your return expectation. And please buy quality rather than just momentum.
These are a great time to, when everything goes up, great time to shift positions, come back to high quality. If you may have been a slightly adventurous on low quality names. Nilesh bhai, I want to talk about in the last 3 weeks, 2 major strategists, both which you consume notes of. Jeffries is talking about it. Even Morgan Stanley, the conference start was with that point that H2 we may see FIs coming back. I am not comparing FI versus DI. Purely as an investor community, I want you to give me a view that They've been away for a long time. And how long can, even the India dedicated guys who do have India on their radars avoid such a high superior growth environment, amazing vibrant democracy, all of that? Is it likely that they may come back in the second half of the year?
So the FPIs are facing the dilemma, should they buy Sasta market or should they buy Sundar market? There are many Sasta markets, cheap markets globally. China trades at 1/3 of India's valuation. Russia trades at 1/8. Brazil, South Africa trades at 1/2. So there are many, many cheap markets, but unfortunately, earnings growth there is not as good as India. Governance standards are not as good as India, and hence investor experience has been bad. Now, if you have to invest in India, you are paying top dollar valuation. My feeling is that this dilemma, this kashmakash between FPI, should they buy cheap, should they buy expensive but good, will continue, and which is what is reflected in their behavior. 2 months they are buyers, 1 month they are sellers. Their buyer, election result that they are sellers. This kashmakash will continue, but eventually Shubha ka bula sham ko ghar laut aayega.
Ignore a market like India. Anyway, let's come back to Indian investors. Last 4-5 years have been particularly enriching for their portfolios. They have stuck to their guns. SIPs have not slowed down any meaningfully, despite of how severe the falls are. I mean, we have the latest evidence of big buying by Indian investors. What would your message be to them who are sitting on very nice, handsome gains last 5 years, and their eagerness to deploy is not going down in a hurry? Should they be moderating their, kind of expectations, but still sticking to their investment process with 5-7 year view from here on, or book profits?
I will always recommend people to follow their asset allocation dharma. If you are too much over invested into equity, there is no harm in taking profit. If you are under invested in equity, then there's no harm in investing even at this level, but with longer term horizon. So please follow your asset allocation dharma. Don't chew more than what you can afford.
In fact, A. Bala is also now joining us from Birla AMC. Bala, we were just talking to Nilesh Bhai about the strength and the faith Indian investor has kept, and hence that has been rewarded in the market. Now that we are at 24K on the Nifty, what is your messaging to the investor community? Stick to your investing, book profits, be careful. What exactly are you messaging?
I think, of course, investors should continue to keep their conviction of investing in for equity for long term. Though the market touched all-time high, 24,000, what you mentioned about, is something one should celebrate, cherish. Given the fact that outlook in general for India continues to remain robust, therefore have the conviction and keep their optimism on India and in particular in equity market. I think that should continue. But with respect to the investment, as Nilesh mentioned, I think every investor would have their own risk appetite, and asset allocations would play a very major role. Therefore, irrespective of whatever the market condition, one should not move away from asset allocations focus and stick to the asset allocation focus. Somebody is under invested in equity, definitely they should begin and stay invested for long term. One thing they should always keep in mind: these kind of fluctuations, or maybe the joyful in the market will always come and go, and therefore one should look at the investing for longer term rather than looking at the short term benefit.
Right. We also have Gautam Shah joining in with us. Gautam, good afternoon. 24,000 is what the Nifty is reached at, and 23 sessions just to move from 23,000 to 24,000. What are we expecting next for the Nifty?
But I think 24,000 is just a number. I think as we keep making a point that domestic liquidity has been a key trigger to this entire rally, and post June 4th, I think people started to realize in the nation that equity market, bull market is here to stay, given the fact that there was politics continuity in some sense. And even at current levels, as a technician, I feel very comfortable because there is brilliant sector rotation and segment rotation that has happened. I mean, if you see the last 2.5 weeks, it's the large caps which have actually done well, with many of these top stocks like SDFC Bank and Reliance Industries making a comeback, which is great news. And prior to the election results, you had the mid caps and small caps doing well. So this is a very mature bull market. We are still not expensive. Chartically, I think we are very, very well placed. There is still a lot of concerns whether we are going to top out or not. And markets never top out on concern or fear. So I don't think there is still greed in the system, and there is still a long way to go. One should stay committed without really trying to overanalyze or trying to make in and out movements on a daily basis.
The market is what you're saying, Gautam. Then stay committed. And which sectors do you think that one can continue to stay committed to?
See, I think the key takeaway is that the banks have come back very strongly in the last 15 days, which I think was much needed because in the last 6 months, the banks and the NBFCs were underperformers. Now, with the comeback of the banks, I think there is a lot of headroom over the next 6 to 12 months. And I personally have put out a 60,000 target on the bank Nifty. So for me, the top banking stocks, I think, are very well placed. The top NBFCs led by Bajaj Finance are very well placed. And some of the top insurance companies are very well placed. So this entire segment we like from a medium-term standpoint. I will also add metals, pharma and FMCG here, which we feel offer very good risk reward from a medium-term standpoint.
Bala sir, just one question for you is, how do you see mid-cap and small-cap now moving? What is it that one should be expecting in terms of participation from here? Yes, we had previously seen that run-up, but last few times we've seen this last few trading sessions, at least a bit of a subduedness. So over there, what is the trajectory one could expect?
I think the way I see is the mid and small cap is always get recognized in a rising equity market. And second, when economic growth is going to be widespread, you will definitely see a participation coming from the small and mid-sized companies, given the fact that we are looking at the broader economic growth coming from multiple sectors, thanks to the government spending and private capital coming in. And in general, rural income is also rising. So therefore, this segment will remain. Valuation debate, always a shift between large cap and mid cap, small cap, always happening. But at the end of the day, the way I see is if you look at a 3 to 4 year time horizon for investing in large cap, then you must definitely look at 5 to 7 year kind of time horizon as well as small and mid cap. And then timing the investing in small and mid cap is extremely difficult because 3 to 4 year cycles, it actually does change in every 3 to 4 year cycle. But I think if you ride through the entire cycles and look at long-term investing, in general, the reward ratio for a small and mid-cap is substantially higher than the large cap. Therefore, again, we should come back to the allocation between the core portfolio, which I generally call it, which is the large cap, flexi cap, and multi-cap, and small and mid-cap. I think each of the 5 segments, we must have exposure, but the percentage ratios can always vary from each one to each of the asset class. But at the same time, one should keep in mind risk reward is always very high in small and mid cap, as long as you give a longer time frame for your investment.
Okay, thank you so much, gentlemen, for joining in with us on Nifty reaching 24,000. Thank you so much for joining in with us this afternoon. But on that note,
if you like this video, then like, share and subscribe to ET Now.